Hey there, and welcome to another Strategy Masterclass from us here at Strategy in Action. Today, we're going to be exploring two key components of the external analysis. We're going to look at market sizing, understanding the size and potential growth of markets, as well as opportunities and threats for organizations. So to begin with, let's jump straight into the slides. Here, we can see our classic playing field. This is the market matrix of an organization, defining where they play today and where they could potentially play. Now, within this playing field, we've defined market spaces being the intersection between an offering and between a market segment, between the channels, between the geographies in which they play. Now, it's critical that we define market spaces because within these market spaces, there are significant differences. Differences in terms of our competitors, differences in terms of our performance, differences in terms of revenue and gross margin and trends and forces, but also with regards to the size of the market and within the size of the market, the opportunities we can potentially leverage and the threats that we may need to mitigate. So let's go take a look at the key components of external analysis and then we'll hone in on those two today. Within the external analysis, we map out the playing field. We just looked at that. We also define our future playing field. Are there areas where we potentially could go and play where we're not present today, either in terms of adjacencies or entirely new sections? And then we size the market. We'll be deep diving on that in just a moment. We also perform a landscape assessment. We have videos that talk about that, related to trends and forces and comparative advantage and disadvantage. And then finally, on the right-hand side here, you can see that we identify and size opportunities and threats. In terms of sizing the market then, there is a classic framework that we often apply. And you may have heard of this before. It's called the TAM, SAM, SOM Framework. And the TAM, SAM, SOM framework is used to size markets. So TAM, to begin with, that large orange circle we see here, that stands for total addressable market. It represents the total market demand for an organization's product or service. And here we can think about an organization's product or service within a specific market space. SAM, that green circle that we can see here, stands for serviceable addressable market. The SAM represents the segment of your TAM, of your total addressable market, targeted by your products or services, which is within your reach. You could potentially go and grab. Finally, you have your SOM, your serviceable obtainable market. The SOM represents the portion of your SAM, of your serviceable addressable market, that your company could realistically capture. Often you'll hear this referred to as your fair share. Now, to calculate TAM, SAM, and SOM, there are a number of approaches that an organization can use. You can go and source market reports, you can go and source market insights, you can leverage external data, you can leverage internal data, but often it's important to triangulate this with analysis, with looking at market drivers and estimating the demand side or estimating the supply side or using constraints to try to size the market. So let's look at these three different approaches. When we estimate the demand size, we break down the market into its constituent demand drivers and make informed estimations about their values. This is most appropriate, often if we're estimating the TAM and the SAM. When we estimate the supply side, so a different approach to estimating the size of the market, we identify the largest players and their annual revenue and estimate the combined market share with which they hold. This is often most appropriate for looking more specifically at the SAM and the SOM. Finally, we may estimate the market based on constraints. So we identify the appropriate internal constraints. It could be capacity, it could be access distribution channels, it could be geographies, and we estimate how much of your current revenue as an organization could increase when those are alleviated. And this is often most appropriate when looking at the SOM. Now, a critical point to remember when market sizing is that when we look at market sizing, we're talking about something which is very intangible, often changing. We may also be talking about the future. So market sizing inherently, whether we're looking at a report or whether we're using drivers, is inherently about being directionally right. So we need to remember market sizing is never specifically accurate, but maybe it doesn't need to be. It's better to be broadly right than precisely wrong. We need to think directionally right. Finally then, why do we conduct market sizing? Why do we want to know how big a market is, or how small it is, or if it's growing or not? Well, we want to know in order to understand, are there particular opportunities within that market that we can go and grab? Is that market growing? Is there a large fair share, a large serviceable, attainable market for us to go after? Or are there particular threats? Are there areas where our current business is under threat that we may need to mitigate? And we define opportunities and threats a little bit differently. So for us, opportunities represent the potential for an organisation to grow their revenue and margin in specific markets, and we try to attach a monetary value to this. And threats represent the risk associated with external market forces, which jeopardise an organisation's financial position. So for us, for example, a threat isn't AI. AI doesn't constitute a threat. A threat is the monetary value, the revenue or the margin that we stand to potentially lose in certain market spaces that are impacted by the rise of AI. An opportunity isn't really the fact that certain customers are now minded and well placed to buy our products. The opportunity is the monetary value, is the potential financial impact that we can have as a result of that trend. That's the way we look at opportunities and threats. Finally then, how do opportunities and threats overlay into our playing field? Well, opportunities inherently are related to both where we play today and also where we could go and play. Because we could further penetrate the market, we could grow our existing customer base, we could grow revenue, we could grow margin within the service and products we have on the market today, but we could also explore new areas. We could explore adjacencies. We could launch new products to the market. We could take an existing product and launch it in a different market segment. And that's an opportunity. Threats, on the other hand, only specifically relate to the markets in which we play today. Because our revenue and our margin and our financial performance can only be under threat where we have revenue and gross margin today. So threats exist only within the existing market spaces in which we play. This was just a quick overview, a quick insight, a quick run through of market sizing, what it means to do market sizing, some of the frameworks we use, and how it pertains to opportunities and threats for organizations. We have some further content out, articles and blogs related to this topic in particular. I hope you found this video useful. I look forward to seeing you on the next one. Thank you.